November 10th at 11:30, Canada's only weekly mortgage news podcast. And today we're talking about 3 ways that you can prepare for your renewal. Not sure if you're in that situation yourself, but there's a lot of folks out there that are just waiting to get the renewal in anticipation that their payments are going to go up quite considerably. So we're going to be talking about how to prepare for this today. And I'm your host, Joe Bladek. I've been doing these episodes now. We're on episode 107. So thanks for joining us today. If you have any questions, as usual, post them in the link below or the comment section below. And always, if you are looking to book an appointment with me, we will have an appointment link available in the description as well. So 3 ways that you can prepare for your renewal. Well, first of all, why am I doing this today? Well, one of the reasons why I'm doing this today is because, as I said, a lot of folks are in a situation where they need to be able to get things ready in anticipation for the renewal. I know myself, I have been fortunate enough to have to renew my mortgage this year as well. And because of that, I got the sticker shock of getting a mortgage payment that is hundreds of dollars higher as well. So with that, it becomes really hard to be able to deal with that just on the fly. So any information that I can help give my clients and homeowners in Canada is going to really help them get prepared for this. And it will be useful because it will give you an idea of what you need to do to get ready for your mortgage renewal and perhaps give you a little bit of sense of security going into your mortgage renewal rather than a sense of panic. So when I got my mortgage renewal, there was a little bit of panic, but also I had anticipated that it would have gone up. So there is that as well. So the financial impact of the mortgage renewals right now, people are finding that they do need to cut back spending just to be able to afford a house right now, especially if they bought in the most recent 1 or 2 years during COVID. And that's simply because mortgages are quite a lot higher. And because of that, payments are quite a lot higher. And if you've taken a 1 or a 2 year fixed mortgage, you're seeing your rate go up 2, 3, sometimes 4% on your renewal. So let's look at the 3 ways folks can prepare for their mortgage renewal. One, first of all, definitely talk to your mortgage professional, mortgage broker. As I mentioned, my appointment link is below. And just by doing that, we can go over all the options available to you. There's many options available to all homeowners with regards to their mortgage. There's so many ways that we can adjust the mortgage so it can be more palatable for you going forward. There's different types of mortgages. We can look at amortizing it over a different period. So definitely make an appointment with your mortgage professional. That's number one. That's something that I really would advise doing no more than 3 to 4 months out. If you're looking at booking an appointment 1 month out or even 2 weeks out, you may run into a situation where you might need to take that mortgage renewal, because just by making an appointment 2 weeks out, sometimes that's not really enough time to switch things up. If you are looking to switch things up, you might need to take that renewal. And by switching things up after that point, you might run into a penalty. So definitely make sure you give yourself 3 to 4 months before your renewal date. And if you have that coming up, make sure you book an appointment today so we can get you started and looking at what options you have today. The second thing Canadians can do if you own a home today and you're looking to prepare for your mortgage renewal is take a look at your budget. So that's number 2. Take a look at your budget. You want to take a look at all your spending, maybe sit down with your family or your spouse if you do the budget together, and just look at your spending, see what you're spending on wants, see what you're spending on needs, and look at the wants, look at the frivolous items. Perhaps you're looking at, maybe you have all the different memberships. You have Amazon Prime, Netflix, Hulu, Disney Plus. Maybe you can cut back on a couple of those. Maybe you're buying, $10 or $20 Starbucks coffees every day. Maybe you can cut that down to $2 or $3 coffees, or maybe even make your coffee at home and bring it. Maybe you're buying lunch every week or every day of the week. Maybe you can start bringing your lunch. Things like that really tend to add up. Maybe you're going to the movies every Friday and spending $300 on popcorn. Just cutting one of those weeks out is going to really help you save some money for your mortgage renewal as well, and just be able to be prepared for that sticker shock when that paperwork does come in. So that's number 2, and that's review your budget and make sure that you're looking at what you're spending your money on to make sure that you're good to go for that mortgage renewal. And number 3, which a lot of people can't do, but it's definitely something that you can do in preparation for your mortgage renewal, is to either pay down debt or, even better, make a bulk payment on your mortgage. I'll explain how these help as well. So by paying down debt, you're going to be able to put yourself in a situation where you'll have less money going out to credit cards and lines of credit, and then you'll have more money available for your mortgage. If you can do that in preparation for your mortgage renewal, that's great. If you don't have any debt, then I would suggest try to make a bulk payment on your mortgage. If you can do any amount of money as a prepayment on your mortgage balance before your renewal paperwork gets issued, you will see your payment reduced on your mortgage renewal than versus what it would rather be if you did not do that. So that's another way you can prepare for your mortgage renewal. Make sure that you're setting yourself up for success when it comes to getting all set and trying to avoid the sticker shock, trying to prepare yourself, and making sure that you're ready for that mortgage renewal coming to you. Now, there's numerous of options available as well. I just want to make sure that we go over that. When a mortgage renewal does come to you, a lot of the times the lender will provide you with the top 3 or 4 options that most people take. However, you can definitely reach out to your lender or myself as a mortgage broker to find out what other options that same lender may have for you, because there could be other variable rates, other fixed rates, different terms available. For example, a lot of clients these last few months have been interested in 1 or 2 year fixed mortgages. A lot of these clients are thinking they don't want to lock in for another 5 years at the high rate when they believe that rates may come down in the next 1 to 2 years. So if rates are going to come down in the next 1 to 2 years, these folks are locking in for that 1 to 2 year period in anticipation that when that mortgage comes up for renewal, you'll be at a lower rate environment and be able to take a lower rate at that point in time. So those are really 3 ways everyone can today prepare for their mortgage renewal coming up. So what else are we going to be chatting about today? Well, we're going to be chatting about some of the really awesome information that I like to share on Canadian Mortgage Weekly with regards to bond yields and all that awesome jazzy stuff here. I get really excited about mortgages, and because of that, I really love to be able to share this information, and I'll just try to go through how this information is going to affect your mortgage today. So there you go. We see it's episode 107. Thanks for all my viewers watching Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. So let's take a look now at where the bond yield's at. So as you see, my slide above, we have the Canadian bond yield, and it has been all over the place the last 2 weeks, ever since the rate announcement at the end of October, on October 26, 2022, we did see a jump of 75 basis points. A jump of 50 basis points for the overnight rate with Canada, which caused the prime rate to go up by 50 basis points. This was a lower increase than what a lot of news outlets were predicting, of 75 basis points. And what we saw as soon as that happened is the bond yield did go down. Now, what does the 5-year Canadian bond yield have to do with mortgage rates? Well, if the bond yield is rising, then 5-year fixed rates are rising. If the 5-year bond yield is going down, then we tend to see 5-year fixed rates mortgages trending down. And I'm not sure if you can see here, we did peak here at 3.83%, I believe it was. Then it dropped quite considerably below this black line. Went back up earlier this week to 3.75%. And then now we're back actually at 3.38% as of November the 10th this morning, right before this episode aired. So we were at 3.6 yesterday, 3.38 today. And what I've been seeing is that 5-year fixed mortgages have actually dropped since the rate announcement, which is very strange. We've actually seen people take a refinance now versus earlier because the rates dropped. So that is really interesting news. And because of that, it really gives us an understanding of what could happen on December the 7th, 2022, when the next rate announcement comes out. We might see the Bank of Canada come out with a lower rate increase. I'm not sure, but really interesting to see what will happen there. What are your thoughts? Do you think rates will go up again on December the 7th? And by how much? You know, I may be predicting a 25 basis point increase, if at all, on December the 7th. I could be totally wrong, but that's my prediction at this point based on where the bond yield has been going. And we probably will see that rate increase still because of inflation. So let's take a look at inflation, because that's also something that really impacts the rates today. We did peak at 8.1% in July. We're down to 6.9% as of September 2022. Inflation's still very high. However, with inflation being that high, the Bank of Canada does have a mandate to lower inflation down to 2%. That's going to be a really important target for them. So we'll see if they actually hit that inflation target of 2%. But until then, they're going to continue to monitor this and perhaps continue to raise rates until we hit that 2% mark on inflation. We'll just have to see how much the rates will increase in December. We are seeing inflation taper off, so not sure what their thoughts are here, but what do you guys think? Is inflation going to be going up again for October? We're going to have the numbers next week, I'm imagining, for inflation. We still didn't have them today, so I'll keep you guys posted next week on that. Now, for American inflation, because we are closely tied to the United States, it's also been going down. However, inflation is still very high. We did peak in the United States on 9.1%. We're down to 8.2% as of September 2022. Still very high inflation. However, it has been going down. So what do you guys think? Do you think inflation is going to keep going down? What are your thoughts on that? If it does keep going down, maybe the Bank of Canada will lower the interest rate adjustments. However, at the same time, the bank in the States, the Federal Reserve, has been raising rates there. And as long as the Federal Reserve is raising rates, we might just follow suit with that. So what are your thoughts? Do you think we'll see lower inflation in the United States next month? We'll have those figures for you next week here on Canadian Mortgage Weekly, Canada's only video mortgage weekly news podcast. Let's take a look at the CDOR rate. Now, the CDOR rate really gives us an idea and an understanding of what's happening in the variable rate mortgage market. We did finally see a blip there where it did drop a little bit last week, and then it's back up, not to the same high point this week, but it did go back up. But it's been going up steadily since October 2021. And now we finally had that blip there. So it's interesting to see that. Not sure if that means anything right now. However, as I mentioned, we've had that blip in the bond yield just most recently in the last 2 weeks. Now we're having the blip in the CDOR rate. Right now, the variance to prime is 0.90%, which is very, very small. Right now, if you are taking a 5-year fixed versus a 5-year variable, definitely consider both options as a mortgage or homeowner, because if you're going to consider those two options, I usually look at the CDOR rate to give me an idea of what is a better deal. But right now, one is not really better than the other. So it all comes down to what your mortgage and home ownership goals are and your time frame, and whether or not you plan to move in the next few years. So make sure you keep an eye on all that. All right. So looking at the next Bank of Canada announcement, we have that coming up on December the 7th. Right now, the current overnight rate is 3.75%. It did increase, as I mentioned, by 0.50%, which is 50 basis points on the last rate announcement there. And we'll have a pre-rate show on December the 7th, starting at 9:45 a.m. there. And we'll make sure that we go over all the news that's been leading up to the Bank of Canada interest rate announcement, and go over all that with you guys so we can take a look at what's preceding the Bank of Canada announcement, as well as at 10 a.m. we'll have a live reveal of the new interest rate at 10 a.m. on December the 7th, 2022. Really pumped to be there for that pre-rate show. Join me then. As I mentioned, with that blip in the bond yield and that blip in the CDOR rate, could mean that we could see a lower rate increase on December the 7th, or perhaps maybe even no rate increase on December the 7th. We'll have to see. Bank of Canada does have inflation as a target to hit of 2%. Right now, we still are at 6.9%. So interested to hear what you think. Please mention it in the comments below what you think will happen on December the 7th. Will the Bank of Canada continue to increase rates? What are your thoughts? But let's keep moving on here. We have the average national house price. That is at $640,479. That's as of September 2022. So really interesting to see that right now. And with regards to that and the national average house price, it has been going down since February 2022, which is really taken a big dive, 23.8% between February and August 2022. A lot of homeowners that did experience that large price reduction. So really hard to see that, really hard to stomach that. However, new news coming out right now is showing that the average national house price did increase by 1.5% between August and September. That is huge news. And then again, 0.44% from September till now. So we'll have to see what happens with the average national house price, but with it going up just slightly, it may have reversed that trend, which will be really advantageous for Canadian homeowners. If you own a home in Canada, you want to hear that your house is no longer depreciating. So if you're waiting for the bottom of the market's already gone down quite considerably, 23.8%. And if we look at what TD Bank was saying earlier this year, they're saying that house prices should drop between 20 to 25% by 2023. Well, we already hit that target. So could be that house prices have bottomed out and we're just going to experience very, very small increases or no increases or decreases at all between now and 2023. What are your thoughts? Do you think house prices have bottomed out? Do you think they're going to continue to go down? Interested to hear what your thoughts are in the comments below. All right. Now, to buy a national house price right now, you're going to need an income of $160,000 and a down payment of $42,000. So that's quite an amount there to have ready, but that's what we're looking at right now. So that's episode 107. So thanks for joining me today on Canadian Mortgage Weekly, Canada's weekly mortgage news podcast, here on November the 10th, 2022 at 11:30. It's really awesome to be here. I'm your host, Joe Bladek. If you have any questions or thinking about getting a mortgage done, please do book an appointment with me in the link description below. We can meet over Zoom, Skype. I deal with mortgages all over Ontario. And if you're purchasing a home or refinancing, we can look at some different options available to you as a homeowner or potential homeowner. As well, if you're a first-time homebuyer, definitely reach out to me. I'm a first-time homebuyer specialist. I can get you set up with rebates, grants, or tax credits, or all of the three combined when you are buying your first home, so we can put more money back in your pocket at the end of the day. Because we all know that buying your first home, I was there before, really sometimes don't know where to start. So we can guide you. I can guide you the whole way through and get you set up with those tax credits, refunds, or rebates available to you as a first-time home buyer. And I'm going to just take a look at the chat here to see if there's anything in there. Okay, so when are rates going down? Well, as I mentioned, rates could go down next year. There's a lot of talk of recession in Canada happening next year. A lot of people do think we're in a recession now, and it all depends, right? If we do see a recession, the Bank of Canada will have to lower rates at that point. And if they do see job losses and a recession hitting Canadians, they won't want that to stick around for very long. So we could expect rates to go down if that happens. But in the meantime, if you have any other further questions, do send me a private message or book an appointment with me today. Would love to take a look at your personal situation. Thanks for joining me here on Canadian Mortgage Weekly, Canada's only video mortgage news podcast. And we'll see you next week for episode 108. Keep an eye out for our Facebook or YouTube page to see what we're going to be chatting about then.